Welcome back to another Stock Market Open live stream. Well, we are on to a day we're supposed to hear from Powie Wowie. We've got Tesla's down about 2%. We've got BTC sitting at about the 60 thrizzles. I'd like to always look to see what's going on, and if we go back here on the hour chart, we could see no real push here in that 3 to 4 a.m. hour. We did get a little bit right there, but boy, not much as we usually get. So we're finally really in that no man's land between 57K and 69, our previous all-time high. So, excuse me. Oh my goodness. All right. Anyway, so it's not a great place to be. That convergence is really starting to look like we're getting the breakout to the downside, which of course we are blaming Israel and the uncertainty around Israel for this, specifically when you have Iran suggesting that we're going to reply within seconds with a weapon we've never used before. It makes sense that there's a lot of uncertainty in markets right now. I can show that. Let me put that up on screen right here. This was quite an interesting post here. This was right here. The Speaker of the Iranian Parliament said that Iran is prepared to utilize a weapon it has never used before if Israel decides to launch a retaliatory attack. And so, of course, I promptly replied to this comment about a weapon that they've never used before with, "Oh, let me guess, that weapon is an IQ test." So, now, we wait and see what that weapon is, what Israel's response is likely to be. Supposedly, Israel's ready to hold a meeting this morning, so we're sort of on standby to see what comes out of that. Israel, let's see here, if we go, well, it's actually a Tuesday meeting, so I would expect that meeting would occur sometime between, 10 a.m. their time and maybe 5 p.m. Given that it's already 3:28 p.m. over there, they got about 90 minutes. Which is roughly how long this live stream goes anyway. So maybe we'll hear something. But anyway, yeah, let's see what's up today. So at least in the pre-market, cheesecake's up. Now, usually cheesecake's not at the top of our list, so maybe there was some kind of news. Let me pull it here. Yesterday, if you haven't seen it yet on the main channel, I encourage you to watch it. The breakdown of what's going on at the banks is quite a breakdown. Let's just say it was somewhat sus, to say the least, about what's going on in the economy and what's going on with consumers specifically. It certainly concerned me, and it's going to be something I'm paying very close attention to. Really starting to see some cracks. So let's see here. Cheesecake Factory. Reader interest up. Okay. Q1 observed sales rise 0.7%. Huh. Okay. This is sales observed at the Cheesecake Factory by, I'm not sure if this might just be some satellite imagery. Oh, the data draws from sample credit card and debit card purchases. Got it. Yeah. Sometimes you get either satellite imagery that goes into this, or you get, any kind of other data. In this case, obviously, imagery, credit and debit card data that goes into this. Let's see, what are they yapping about right here? I see this big red bar. March housing starts. Oh, those come out like now, right? Let's listen in.
Fed President Mary Daly yesterday saying there's no rush to be cutting rates here. We have a number of firms saying some things to the effect of Goldilocks, that narrative that there's a Goldilocks scenario in terms of the economy. Goldilocks is dead.
Yeah, housing starts came in at 1.321 million right now. Like, the data just came out 5:30 versus the survey of 1485. So that's lower than expected. Building permits came in lower than expected at 1458K versus the 1510 expected. That puts you at housing starts negative 14.7%, building permits negative 4.3%. Yeah, it's not ideal. Let's see what they're saying about it.
14.7% drop Permits also down. They were expected to be quite a bit higher. They're expected to be about consistent with where they were, about 1.51 from 1.52, but it came in at 1.45. Let's see if we can figure out where it was. Single-family home starts down to about a million from 1.1, 1.2. And multifamily down to 299,000. This is, by the way, all at an annual rate. We'd expect some decline in the multifamily because that has been very strong, and they've been cutting back there. Let's see if we have an idea where this happened. Just about every region: Northeast down 36%, Midwest down 23%, the South down 18%. Only the West was up 7.1% by region. So. Not making much progress, I would say, in the effort to build more homes in this country and fill the massive and lingering deficit for home values. Been trying to think about the best course here for the Federal Reserve and housing, and almost every course it might take would be negative for it. I can't figure out. First of all, let's talk about the balance sheet. They want to get rid of these mortgages. They have a lot of them.
That's talking about the Fed. Canadian CPI, non-seasonally adjusted month over month, comes in at 0.6 versus 0.7 expected. Year over year is 2.9. 0.6 is still quite a bit. I mean, it's non-seasonally adjusted, but 0.6 is still 7.2% an annual rate. So, seeing a strong number there on that number. I mean, again, below survey, but still up. I think that's also, though, because it's not a core number that is therefore reflecting energy. And it looks like March. Can I get a core number here? Yeah, it ticks up higher because of core gas. I don't know, or because of gas prices. I don't know if they do core. They got to do core here somewhere. Oh yeah, here it is. Canada CPI seasonally adjusted, 0.3%. That's seasonally adjusted. Okay, where's core? Canada trim median core. Yeah, I don't know what goes into that. 1.25%. CPI X shelter 1.5%. Median core CPI 2.8. X gas slows to 2.1. I don't know what the expectations were in some of these, but the headline certainly ticked up on energy prices. All right, that's Canada. So, talked cheesecake, talked Canada, talked a little bit of what expectations are for Israel. Now we have to see how the day moves. Morgan Stanley traders rally past estimate as profits rise 14%. You know, Morgan Stanley is in the same world basically as Goldman. And Goldman had a big trading beat yesterday. It's not so much consumer banking. It's trading that's kicking butt. Trading is what a dollar hollers are right now. Remember, you get all my buy-sell alerts and stocks and psych. So Morgan Stanley EPS $2.02, net interest income $1.80 versus $1.96 expected. That's billion, by the way. So also a slight miss there on net interest income, which we saw at JPM and some of the other banks as well. Wealth management $6.88 billion versus $6.69. Total deposits beats a little bit. Also, same thing with credit losses. They actually took a $6 million recovery rather than the estimate of about a $70 million write-down. So you're seeing a lot of almost across the board, all the banks are like, yeah, we don't need credit losses this quarter. Okay. So I think that just sort of props up expenses in a harder time, props up EPS in a little bit of a harder quarter. And I think it's a lie. But watch my video on that. But that is interesting to see Morgan Stanley do the same thing. Okay. But then again, they're all in bed together. All right. So that's Morgan Stanley. Let's see how they're actually moving here in pre-market. Trump Media Group moving up a couple percent. It was down 18% yesterday. Morgan Stanley up 3.9%. Now following being up 0.93% yesterday, probably on Goldman Sachs sympathy that it was up. Given that Goldman Sachs yesterday was also up about 3, it's up about 0.6 now. Wells Fargo was up about 90 bips yesterday. Raytheon was actually down 8 bips yesterday and up about 0.5% right now in pre-market. We'll see how that those dollar hollows get spent over at what's it called? The spending bill in Congress. Spending bill in Congress is looking like it's going to get a beautiful, delicious refill for everyone. You get money, you get money. And by everyone, I mean like Ukraine and Israel. Billions of dollars going everywhere. All right, let's see here. Boeing fires the lobbying firm that helps navigate the 733 crashes. Well, you know, maybe if you just had good planes, you wouldn't need a lobby. Let's see. What else? Iran hawks want to strike now. Okay. VIX swings. Yeah, no kidding. Volatility's been popping off again. But I mean, this was expected that at some point we were going to get volatility again. So here's your VIX. Go out on the day chart. You can really see that spike. We've been on this longer term downtrend. You kind of see it when we go on the week chart. So we're finally getting a little bit of a move up there on the right, although it's still relatively nominal. Okie dokie. So, DeepMind CEO says Google will spend more than $100 billion on artificial intelligence. Good Lord. $100 billion. The chief of the Google AI business said that over time the company will spend more than $100 billion. But I guess over what time frame? Are they talking about over 10 years or what? $100 billion supercomputer deemed Stargate being planned by Microsoft and OpenAI. Ooh. We don't have specific numbers, but we think we're investing more than that over time. Okay. I would like to make more chips then. Yeah, I mean that's why Nvidia's had such a run though. Everybody's wanting to invest in AI, so you're going right to the chips. It'll be interesting to see how they pull off this earnings season, because if this earnings season you get, you know, any kind of slight weakness under expectations, the things tank. Okay. Let's see what else we have. Let's go for rates. Let's see how we are doing in the morning. We have bonds pretty stable right now, 4.63. How's our 2-year? That's the 10-year. The US 2-year right now is at 4.93, so you're only 30 bips apart on that inversion. You've got the US 30-year, 4.75. Mortgages follow the 10 more closely. So I always like looking at the little mortgage calculator. I always like to throw in, ooh, did they change it? Usually they let me, oh, there we go. I always like to go just type in mortgage rates. And you should always kind of look at the same spot every day. But I always like to change this to 740 and then just kind of see what rates are doing. You can see they're sitting at about 7.6 right now. If you had a lower credit score, they're knocking on the neighborhood of 8. And the blue line just shows you its trajectory over time. You can see that we hit these higher levels here in March of about 7.5. And we've just recently broken through. I suspect that these numbers are going to keep rising with how robust yields have been. So, very well. Okay. Then, what do we have? What else is there? So that's mortgages. This is seeing sizzles. Let's see, oh yeah, here. Boeing whistleblower.
Side when they report their results in a week and a half, I think expectations are relatively low, but it will be, in our view, an opportunity where management will provide more of a clear the deck, so to speak, in terms of setting expectations this year. And that's around.
Bro, Kyle, I'm sorry to hear that, man. That's messed up. I was in a public bathroom in the last stall. A man in a Dragon Median helmet came in next to me and set up a dwarf cannon while I was using the bathroom. Dude, you got camped, man. That sucks. That sucks. See you in Lumbee. Do you think Elon is having some kind of mental breakdown? Well, I've actually kind of thought that for a while now, mostly because I think it's very difficult to kind of see your baby having such struggles, right? Like Tesla is his baby, and you're having a lot of struggle at Tesla. And it's unfortunate because there's a good chunk that's out of his control. I mean, what can he do about interest rates? And he gets, I think, a lot of personal satisfaction from getting a lot of likes and engagement on the internet. Unfortunately, he gets that from, more right-leaning content. And the downside of that is, you're catering to mostly your non-Tesla audience. And I'm not saying there aren't some Republicans who will buy an electric vehicle or a Tesla. I think Teslas are great vehicles, but you're gonna have some potential concern that maybe Elon's a little down in the dumps, and therefore acting maybe a little bit more rash. Unfortunately, that it's not the best look when you fire like 10,000 people, including 1/4 of your senior executive staff, because there are only 4 named executives and one of them got the boot. And then you're right back to sort of memes and laughing emojis on Twitter or X. It feels a little insensitive, unfortunately. So all of this AI is going to require more copper. There he is. Plane crash investigations show how many times Boeing and airline companies try to cheat. Yeah, costs lives. Yep. Yeah. Why do you take the side of the fascist government? I'm not taking any side. I'm a Republican and won't buy a Tesla. Go Elon. It's funny you say that. I was joking with Lauren yesterday. I'm like, yeah, he's really screaming exactly what, Republicans want to hear. And I'm like, yes, Elon, give me more. Give me more. But I won't buy a Tesla. I was making that joke yesterday to Lauren. It's funny seeing you say that. That's funny. So, yeah, Aviator here says, Elon derangement syndrome again. Right, yes, making realistic comments. It's fun. You're deranged. I think people who are incapable of having a critical outlook are deranged themselves. So maybe it is you who ought to look into the mirror. So, more cowbell. I was riding a merry-go-round with Max. He's 6, and my little whatever it was magical creature had a cowbell on it. And you could kind of like shake it to make the cowbell ring. And I was just going around screaming, I need more cowbell. There were actually quite a few parents who know exactly what that's from. That's funny. All right. So what else here? Gold's rally will soon capture the imagination of the masses. Oh, okay. Gold is in a bullish mood, breaking record after record as it pushes higher on central bank buying, geopolitical haven demand, and inflation hedging. Yet the rally hasn't really captured the imagination of the wider investment community yet. Perhaps there's just too much competition, with Bitcoin and Nvidia being darlings at the moment. The lack of interest can be seen in exchange-traded funds, where there have been net sellers of metal this year. Still, gains in gold have a tendency to capture the public imagination eventually, and when it does, these increases become self-perpetuating. Ooh. Right. That's the self-perpetuating nature of sort of markets, is that once stuff really goes up, it goes up even more. I got a fever! Is it the only cure or the only medicine? I can't remember the line now. And the only cure, the only medicine is more cowbell. Something like that. I can't remember if it was cure or medicine. I'll have to watch it again. It's been a while. Yeah, SNL skit, exactly. Cook's assistant. Oh, yeah. Let's see here. What here? Okay, so let's go with... Let's make sure we're getting this up. Okay, perfect. So next thing is, so we got, what was gold doing again? I don't think it was over 24 yet again. We were getting there yesterday. We are at, close, 23.90. All right, let's see what the Doomers have for us today. Oh, prescription, and the only prescription is more cowbell. That's what it was. Oh, it's been years since I've watched it. Oh yeah, we should watch it again. That's fine. The only prescription. Good call. All right. Doomberg and CNBC are on commercial. Fine. No problem. NBC reporting that an Israeli plane to attack Iran on Saturday. Oh, really? NBC is getting this? U.S. officials expect Israeli response to Iran's retaliatory strikes will be limited. Right. Initially, the expectation was there'd be nothing. We shall see. Okay, let's see here. So... yeah, okay, Tesla's biggest cuts yet. Yeah, these, well, it's been 5 years since you've really cut in manufacturing. You know, I've gotten a lot of DMs from people who are like, somebody sent me a DM, they're like, my husband was in the energy division in Palo Alto, just got laid off. Feel pretty bad about that. There are other people who say, I get messages from in sales departments that say, hey, I got laid off. I got some people who say, I left months ago. And, here's what's going on out there, whatever. So I'm getting a lot of DMs from people. It's interesting. A lot of stories to be heard. But it's kind of sucks, because and the way the mainstream media is trying to play it is like, oh, look, here's Elon partying at, the prize ceremonies a day before the layoffs in LA. And then, let's go home and send out a late night 1 a.m. email that we've done a thorough review of the organization and made the difficult decision to reduce our headcount. And, back to memes afterwards. I think that's a little more bearish, but that's sort of the way some of the MSM are sort of framing what happened. But I don't know if they're necessarily relatable, but I get it. I mean, I'd be torn if I had to fire people. It sucks. Let alone like 10,000. My God. But anyway, so all right, what does Doomer have for us?
Consumer, part commercial. You do have the investment bank that can be helpful. I do think that the wealth management business can be a buffer. So I think having all of those, that's where the large national banks really compete very effectively.
Isaac, tell me more about this. You say this market sucks. It's hard to find employment. Tell me more. I'm seeing more and more people just sort of in the local community that are like, yeah, I lost my job. Hard to find another job. So I'm hearing that quite a bit. Another thing that I noticed is I was like, man, all this like GDP and jobs data is supposed to imply that like the economy's so good. But Lauren and I, we went on a walk around a particular neighborhood yesterday, and we're like, golly, usually in a good economy, like people do their lawns and people paint their houses and basically we're just like, wow, this neighborhood's like full of either wedge deals or everybody's out of money. And so we're walking around going, what is going on? That was remarkable. But again, it's the anecdotes are, as we know, an anecdote is the opposite of data, so you have to be careful. But yeah, Chris, if you want to bundle up for the live event and you're already a course member, send us an email at staff@meetkevin.com, and we could take care of you. So for bundles, the live event's going to be sick, so we're pretty excited about that. I haven't really been pitching it too much the last few weeks here as we're getting it situated, so we can really announce the rest of the details of it. All right. Let's see here. In 5 years, that's interesting. Somebody here says they sold their Tesla, giving up on Elon. Someone else says the mainstream media is a joke. What else? Look at Coin. All right, let's look at Coinbase. Yeah, they were down 9% yesterday. Let's take a peek. Yeah, down 9% yesterday, and you're down 41 bips in pre-market. We've got on the hour chart, you could really see that pain yesterday. Really started in the AM, but what happened was Israel really sort of accelerated this by, saying essentially they have no choice but to retaliate. That's really going to be a market mover, and it's one of the challenges with trading in this environment is that, you can make a trade and then one bit of news comes out on Israel and your trade flips. So we were strategizing in the course member live stream on trading on that yesterday. One of the focuses that a lot of people have been looking at has been shorting small caps on some of this news. That seems to have done well. I work in multifamily real estate development. In the past 3 years, you would get 5 recruiters reaching out every week. Now, with more experience, I have 0 recruiters reaching out. Ah, nice. Yeah, that's, it's, I don't know, man. It's not great. My neighbor was a project manager for Epic. Can't find a job. She also quit, but thought it would be easier to find a replacement. Oh, that sucks. That just sucks. That's the worst when you leave a job thinking, oh, you're going to find something better, and then you get screwed. Long and variable lags. No kidding. Very hard to find good positions right now. It's unfortunate. In New Hampshire, we are seeing more people looking for work, but the quality of employee isn't quite there yet. Trying to word that correctly. Yeah, I mean, it's experience, perhaps, right? China's retail salesmen. I have a really hard time looking at Chinese data because I just don't believe it. So that's not saying I believe the U.S. data. Trust me, I'm skeptical of that too. But I feel like if there's like 20% rigging around the edges in the U.S. data, there's like 80% rigging of the Chinese data. So I'm going to go there and I'm just going to get killed for saying that. But, yeah, their retail sales, they were expected to come up 4.8%. They came in at 3.1%. And let's see here. That would be the March figure. GDP came in supposedly higher, though. Q1 GDP coming in at 5.3% in China year over year versus 4.8%. Yeah, I don't believe it. Oh, okay, yeah, home prices only down 0.34% in March. Okay, China. You got it. You got it, dude. Oh, yeah. What's your opinion on the housing market? Well, I think single family has had some euphoria in January, Feb, March, so I've purposely stayed away from it. And I think it's gonna correct, not like, I don't think like mega housing crash, but there'll be a lot more inventory that comes up, and it'll make it a lot easier to buy. So I actually think from a selling POV, maybe, yeah, interesting. I don't know, but buying, it makes sense to wait on single right now. Multi is where the deals are right now. Yeah. Well, that's with the Christmas sweater. You gotta bring some holiday cheer. Everybody's so depressed today. I like it when I get in here and here's this guy Void. I like that icon though. His icon looks like long time ago I made an icon that was that style, and it sort of evolved into a little bit more of a solid red color, but it was for my Don't Get Biffed commercial. I like that. Respond or I will steal your bonds. Okay. Tesla ex-employees will be selling the stock. Yeah, that's possible. That is possible. Went into Tesla dealership last week. Salesman told me to only lease because they're refreshing the Y next year. Well, I saw this somewhere. I don't remember where I saw it, but I think they were giving bonuses to salespeople if they signed leases. So them coming up with a BS excuse. That's funny. Leasing juices Elon Musk's compensation, and Tesla reported free cash flow. Since Tesla depreciates lease expense to residual value, Tesla counts 100% of the lease revenues as free cash flow. Okay, that's one opinion. That's interesting. And then I'm pretty sure there was I can't remember where it was. I should have saved it. But it was a Tesla lease competition or compensation. Basically promoting leases on purpose. Tesla compensation leases. Yeah, I'll have to keep looking for it. But that I thought was interesting. Oh, well. Oh, maybe it was in a message. Maybe that's what it was. Let me see. Let me look in one more place. Demo drives. Demo drives were done remote. Okay. Layoffs are definitely targeting the sales force as well. Blah, blah, blah. Tesla advisors would hit our targets. As Tesla advisors, we would hit our targets not by selling cars, but just by getting a reservation deposit. So you didn't actually have to get people to follow through. That's very interesting. What is this? I'll have to keep looking around. But anyway. Alright, interesting. Interesting messages. Oops. Let's go here. So what do we have here? This is coin is trying to go positive. JP Morgan, what is it? Oh, JP Morgan has a Tesla sweeping Tesla layoffs announced yesterday, amounting to a reduction in crude production capacity. Should now leave no doubt the decline in deliveries has been a function of lower demand, not supply. Okay. All right, enough of that. I think we get it. All right, so let's go to see what else is going on in the pre-market. Okay, so Barrick Gold and Tesla are trying to chase each other in the pre-market at about 2.5%. Sunrun 1.2%. It's down 4.5 yesterday. Instacart, why are they down in the morning? So Instacart, well, they've had an incredible run. I mean, look at that U-shaped recovery. And topping up a little bit. Carvana's at 69 bucks. Enphase 111. Oh, it's under the 113 level. Palantir, man, they've been on a little bit of a bleed, down to 21.8. How did Nvidia end up yesterday? Nvidia 860 again. Man, I was short on them at I was doing puts at 895 there for a while. 895 puts. We're juiced for a bit. Very volatile though, because sometimes this will run like right over the nines and then back down. David says Peter Schiff for president. How can Tesla's board sit back and watch Elon not be the cheerleader for Tesla but shitpost on X during hard times? Seems like both are failing their obligations. I think the board is just heavily controlled by Elon, and it's sort of hey, you want to keep your job and your stock comp? Shut up and let me do my thing. I think that's Elon mode. I'm an executive recruiter in Chicago and couldn't be busier. Oh, that's good. IMF. Ooh, the IMF numbers just came out. All right. What do we got? IMF. World Economic Global Growth Rate. 3.2% in 2024 and 5. Yeah, okay. Like, they come out with these forecasts, and then you're going to end up getting a recession. And then all of it's going to be trash. They're forecasting 4.6% in China, 2.7% in the U.S., Russia 3.2%. Central banks must stay vigilant on inflation. Federal Reserve should take a cautious approach to easing, given strong U.S. demand. The IMF is now telling J-Powell what to do? Okay. Yeah, not really a movement there on the Qs. You've got baseline outlook is for the labor market to remain strong. Baseline outlook remains inflation will decline further with policy rate at current level. Recent readings on job gains and inflation have come in higher than expected. Outlook is still quite uncertain. Fully committed to getting inflation back to 2%. No reference to policy easing. Huh? Well, there's the IMF for you. I just got a 4060 Ti. What's the Ti part? Are you talking about the Nvidia chips? Let me see. Let's see what this sucker has. Display adapters. No, I've never seen the Ti. That's interesting. See, I have Texas Instruments. Oh, you're talking about, is that a calculator then? 4060, because I'm looking right here and I'm like, here's my GeForce 4090, baby. Let's look up what you have. 4060 Ti. Is that the financial calculator? No, it is the GeForce. Yeah. But who makes the Ti version? It must be some white label one. Ti. I don't know what the Ti is. I thought you were talking about the Nvidia card. That's why I showed mine. Oh, it's just the better version. It must just be the recent edition. It's just slightly better. That's good. Dude, the 40 series, honestly, it's really good. I think this computer, the one next to me, has that. Let me see. Device manager, display adapters. Oh, sorry, that's a 4080. Damn it. They're all good though. All right, what do we got here?
Sort of subliminally, you know, just sort of below. It's the second line in a lot of these readings, but wealth is incredibly strong.
Kevin, I'm curious. First of all, Kevin says, can you stream this on YouTube too? So two funny things about this. One, what's wrong with X, where you're commenting from? Two, it is on YouTube. It's on the Meet Kevin Market channel. Sorry. The TI have lower hash. They were founded to prevent miners to buy up all the GPUs. Oh. Let's see here. Turbo infused. Nobody really knows what it is. TI is the highest spec version of that card. Oh, I see. Okay. Yeah. Improved version. Yeah, that makes sense. It's a souped up 4060. I'm about to graduate with my BBA in finance. What's a BBA? I mean, I know what a BA is. What's a BBA? BBA versus BBA. What degree is it? Bachelor's of Business Administration. Oh. Oh, okay. I didn't know that. That's interesting. Anyway, all right, let's listen in over here.
And said, rotate into financials, rotate into energy. As you look at the results as we close off today on banking, are you convinced of a further...
People believe that TI stands for titanium. That's cool. Like the edge of the iPhone's titanium now, I guess.
So to your point, I think the main thing we've drawn away from this is the near-term wins have been the investment banking wins. The problem with those is if you look at those, that was the same thing at the end of 21 before 22 dropped those away. So I say that because I think really what the most attractive thing is just old commercial banking. Who's collecting good net interest margins even though obviously the deposit costs have gone up, and not all will deal with that well, frankly. Obviously the big banks dealt with big deposit inflows a year ago, and since they're not translating that into higher underwriting for new loans, it's causing drag on the net interest income. So I think that's the big deal is, you know, how will the economy go? So far the economy's hot. and no one seems to be that excited about it. And I think that's a much more fundamental picture of the banks the next 2 to 3 years.
Well, I think that's the sort of the restraint. They're just hesitant to get overly bullish on the economy. Mo, good morning to you. Again, I know that you go for breadth, and I just wondered to what extent this reporting season for the banks, some people argue it's peak net interest income. Others argue it's a strong.
Yeah, I remember you yesterday, actually. I remember you asking the same thing about, can you stream this on YouTube? I asked the same thing yesterday, and I was wondering why as well. Thank you for coming back to provide some insight. X sucks big time in streaming. Quality is bad. Lots of chops. Wasn't clear. You have a special channel for markets. Yeah, that's fair. Sorry. I feel like if I put like a banner up, also on YouTube, I'm just gonna get banned by Elon. I think he thought it would be a lot easier to compete with YouTube than it turned out to be. It's unfortunate, because I'm all for competition, but yeah, YouTube's a beast.
So that exposure to cyclical stocks and cyclical factors is something that we continue to maintain.
Look, one of the hottest topics in the latter part of last year, or certainly for most of last year, was CRE. We saw HSBC actively reduce their exposure to CRE. And many people have again said, don't worry about it, it's well spread out. Cole, you've actively sought out the differentiator when it comes to those banks and their exposure to CRE. How have you put that together in the
Commercial real estate, it's a bubble!
Well, that's a good question. I think the main thing is understanding the loan book of the company you're buying. I think that's what's interesting to us. So, for example, last fall we got involved.
Yes, understand the loans. Okay, I get it. Commercial real estate, whatever. Pitch your stuff. So, let's see what we have here. This is, I always think they do an interesting job. So the Dow closed for its 6th straight day red. The index is now down over 2,000 points from its recent all-time highs. 6th straight day red. The S&P was below its 50-day moving average. We talked about that yesterday as well. First time since last November. S&P is only down 3.7% from its peak. Yeah, in other words, a lot more to go. Look out below. The VIX is now up over 50% in just 3 weeks. Great. Monday was the first time all of the indices closed below their 50-day moving average. Oh, that's very interesting. The number of stocks making new 52-week lows Monday outnumbered those making new 52-week highs by the largest margin since Halloween. What? Oh, let's fix that. That is interesting. Yeah, look at that. Yeah, Halloween was, I remember, November 1st, everything started going up again. It was really annoying because we did the fundraise for House Hack. We had the Reg A going between September and October, and it was like the day we closed the fundraise, the market started going up again. That was the Reg A, that was the non-accredited round. Right now we have what will likely be the last round going on and that ends in June, but it's the accredited round. So I feel bad because there are a lot of people who are non-accredited who are like, hey, I want to be in it, but the market just tanked, and then it's like, that sucks. So that was that was kind of interesting. And so to see now the spread of negative to positive stock movements is basically the worst it's been since Halloween is interesting. All right, let's see here. These are your commodity traders, which also have exposure to stocks. Computers are full of stocks. These strategies trade models, and the models are saying sell. Yeah, they are very long stocks as well. Oh, gosh. Are you seeing panic? To summarize, if there's panic in high torch, absolutely not. High torch volumes are muted, very few risk situations brewing, and zero get-me-out bids wanted. The pace of flow has been boring. Okay, that's a guy from JPM. But sentiment is stretched. Yeah, upper end of positive sentiment. Insiders sell into their own buybacks. Yeah, that's actually a great chart. Percentage of publicly traded companies experiencing net buying from corporate officers and directors. Yeah. Insiders ain't buying. That's a good one. I like that one. I'm gonna put that one on eHack. That's a good one. But yeah, I know what I think is so funny when people are really bullish on stocks. What I find is people will say, "Oh, the insiders, they may be selling, but they're selling through the plans that they set up, and they gave us notice of their selling a while ago." This was like a lot of the response, maybe not a lot, but some of the response I got to the JP Morgan announcement that basically Jamie Dimon was done selling. He sold 1 million shares. And what was remarkable about it was this idea that, oh yeah, well, he disclosed in October that he would be selling in 2024. And so to me, it's funny because it's like you could see the tide turning if you're an insider, and then all you do is just, okay, yeah, I'm gonna give notice now that I'm gonna sell my stocks in 3 months. And then you go sell 1 million shares of JP Morgan as the CEO of Jamie Dimon. And it's the first time Jamie Dimon in his 20 years with JP Morgan has sold. So it's pretty remarkable. He sold like 840 million shares in February, and the rest of them, I think it was yesterday. So a lot of people are looking at that going, yeah, I know they gave us a heads up in October it was coming, but that got him through a good Q4 earnings, which you probably knew was coming, and then you knew the poopies would be on the wall again. I hate to think jadedly like that, but I just do. I think, I love it when people are like, oh, well, that's just a sale that's part of their 10B whatever plan. And I'm like, yeah, okay, all right, so legal insider trading. Got it. Yes, you're right. It's fine. Let them all dump. All right, let's see what we got over here. Commercial. Boring.
That's good news for new CEO Ted Pick. Evercore says, don't call it a comeback. The Morgan Stanley growth story has been here for years. But the shares moving the most are United Health. They had been up even more earlier this morning in the trading session. They experienced a February cyber attack, but earnings per share and revenue were able to come in ahead of estimates. And a lot of analysts have been concerned about rising medical costs, but United Health said they were in line with expectations. So positive news for them this morning as well, Manus.
Okay, certainly one to watch, Simone. Thank you very much. Coming up, the IMF warns of an uneven global growth ahead.
The authorities are a little bit frozen around the world as how do you react to generalized dollar strengthening? How do you react to generalized increase in interest rates in the US? And unfortunately, in the past, when those two things go too far, they break something elsewhere.
Mike McKee joins me to break down the latest IMF report and the warnings.
It's interesting, that insider trading line, the insider selling line, rather, this is the most that we've seen since 2015, and that's only because the chart only goes back to 2015. So in other words, I guess there could have been more insider buying before that. I just put it on eHag. But see, the chart goes back to 2015-ish over here. And so this is the worst or the lowest number of insiders buying stocks right now. So I always like looking at this and I go, is it a good time to buy? Well, let's see what the insiders are doing. Oh. It's just sort of the aggregate of all the insiders. That's not great. Househack is not a REIT. No, Househack is a real estate company that has a beautiful goal, a huge goal of beating the crap out of the fund rises, the roof stocks, the syndicators, every other real estate investment that exists from a corporate point of view. We want to kick their butts. So it's pretty cool now too. We got we've got our own property management suite in development, which that alone has incredible potential. Having a really good, like, non-trashy management suite. The products that exist today, it's funny because we test them out just to sort of compare, and we're like, oh my gosh. But anyway, so lots of innovation available in real estate. All right, how are we doing here? 15 minutes to go. And aren't those all REITs? No. Open Door is not a REIT. They're a company. You've got Fundrise Roofstock. No, they make products. Some of them make products that are REITs. Like Fundrise is a corporation that puts together REITs. That's different. So like you can invest in a REIT through Fundrise, but Fundrise itself is not a REIT. That's a very important difference, because when people ask me what HouseHack is, like, no, HouseHack itself is not a REIT. It could create REITs. I think that's a good sort of comparison. So, anyway, what are we doing today? So, okay, it looks like we got about 50-50 here, green and red. So we actually do have green today. We've got Morgan Stanley up 4, Matterport. Oh, the small caps are coming back a little bit. The small caps were having a little bit of a rough day yesterday. Yeah, what can you 1031 into? You could 1031 eventually into a REIT. That gets a little complicated, but that's essentially where you can end up. There are quite a few steps involved in that. If you actually want to 1031 out of your real estate into like HouseHack real estate, we could do that. We've been talking to a lot of people about doing that since we're setting that up. Email us at ir@househack.com. Insider selling is more important if the seller actually bought the stock. And that's interesting. More of a like maybe like when you see this over here, this sort of like buy the dip buying, so to speak, over here. Yeah, maybe. You saw that in 22 as well, a little bit in 23. Could be an interesting indicator.
Or down in the IMF forecasts among the major economies of the world.
I rarely respond to Twitch because you barely are on there.
Exceptional spending of the pandemic that continues post-pandemic, and that it risks raising interest rates around the world, which could, as Mohammed El-Arian was just talking about, break the world.
Yeah, no, Brian, it's not true. You could literally, there is a way where you could 1031 from real estate that you own into a REIT. It's crazy. It involves a few steps. You got a pit stop into a partnership, and then you could end up rolling that into a REIT. It's really incredible that it exists. But yeah, the fact that you could go from property that you own and 1031 into like a security is it's a game changer. HouseHack is going to do a lot of that because there's massive demand for that. It's a very huge tax efficiency, and we're going to help a lot of people out with that.
And if incoming data suggests inflation is more persistent than I currently expect it to be, it will be appropriate to hold in place the current restrictive stance of policy for longer. So higher for longer if inflation doesn't...
Yeah, no kidding, Mr. Jefferson.
Vice Chair, we heard the same thing from John Williams, the New York Fed president, who's Vice Chair of the Open Market Committee. And this afternoon, we'll get the head of the Troika, Jay Powell, speaking, and we'll see if he is also on the same page. Gonna bet, Manus, he is.
That's true. We do get Jay Powell talking today. About 11 minutes until the market opens. Let me see what time. I'll find out right now. Somebody says, any update on the Nick Eustace? Yes, thank you. Honestly, it's going really well. Summer's very, very pissed, but it's going very well. She's pissed because they're feeding her much slower than they should be, in my opinion, but they're the doctors. She's very pissed. She wants to eat by the bottle more. And she's being fed through her little feeding tube, and she's really pissed about that. You know, I spent a day with her this week. What was it, Friday? I think it was Friday, and I'll be up there again soon. But yeah, it's really sad, but she's actually doing really, really well. So I think she's honestly going to be home within 3 weeks. I was hanging out with the other 4 babies yesterday, and it's going to be really exciting to be able to hold Summer like I can hold them and throw them around. So anyway, okay, so Jefferson, thanks for asking. Jefferson, I have the full thing, his full little spiel here. Let me see what his spiel was. Okay. That's weird. Okay, here we go. Jefferson, Fed's job of restoring 2% inflation is not done yet. Recent inflation data were above the low readings of 2023. GDP slowed a bit, but still above trend. If inflation persists, we have to hold rates higher for longer. Duh. Fully committed to returning 2% inflation. You know what I would hate? I would hate to have to be the dude who just has to echo what J Powell tells you to. Like, all these people who give basically no insight and just say the same crap. I just feel like they got their assignment. Yes, go on TV and say the same trash we've been saying. Reiterate the same message. It's stupid. It's like, I get it. Sometimes I look at this and I'm like, it's not even worth writing down. It's so boring. Anyway. Now, J Powell talking today. That'll be interesting. So, that's Vice Chair Jefferson. Boring. Where's Powie Wowie? News and events. Speeches. Jefferson, you're boring. When's Powie gonna speak? I don't know yet, but I'll figure it out. Anyway. All right, what do we got here?
Treasury. Because that would argue the market forces cannot see the Fed getting control of this. Now, I'm not here...
Somebody here says 1:15. 1:15 Eastern. Oh, okay, thank you. That would be 10:15. Oh, thank you. 1:15 Eastern, 10:15 California time. Thank you.
Said back, well, Mr. President, we're the only one fighting inflation here. The reality is the same thing's going on today. Like we talked about that fiscal spending. Now, one other thing I'll add to what your guest was just saying is that the main problem is American exceptionalism is being espoused in the S&P 500 globally and is being espoused in, as we know, very few companies. So the real danger is this looks like Japan in '89 from an American perspective. It looks like Chinese stocks were in 2010.
Oh, no. Do not say America is like 89. Dude, going into 10 years of nothing would be so devastating. Don't say that.
Do really poorly coming off of highs in equity markets and commodity bull markets that follow that. So if you go back and look, 02 was the high in the dollar. You woke up 6 years later, and Giselle, Tom Brady's ex-wife, wanted to be paid in euros, okay? So I just say that because that is how dangerous U.S. markets are to be a broadly diversified investor. I'm not saying you can't go own stocks. We do, but we're pretty narrow. And we don't own the market.
Just to qualify this, I mean, you're making some big calls there. You're saying
yeah.
we are in the United States of America are facing something like the '89 Japan situation, quite a toxic drawdown. You really think you could get equities down by that amount in the space of 2024? What's the straw that breaks the camel's back on that?
Yeah, it's probably going to look like 72 to 74, where the Nifty 50 get crushed and everything gets crushed with it. I mean, that's one plausible path. The only other path that's looks plausible is more like a 99 to 02, where we beat the hell out of things and the other things that weren't part of the glamorous part of the market actually appreciate. Those look like the two plausible paths. But I'll add one more way of looking at this. We don't really care what happens in the next 12 months. We think the S&P is going to make zero over the next decade. And that is the biggest risk, because those are nominal numbers. Now we're back to debating inflation, and for sure it looks like negative real returns for equities in the S&P 500's case.
Cole, I want a quick one-line response from Mo. Time is against us. Could it be as brutal as Cole lays out? Mo.
We are much more constructive on equities over the long term. And if you kind of look at the last 100 years of equity performance, capital market expectations is you're probably still going to see a pretty significant positive return.
I don't think I've got a convulsion like Japan left in me. Gentlemen, thank you very much. Cole Smead, Mo Hackett.
I don't know, man. I don't like that. Like, whoever this guy is, that was pretty bearish. To compare, like, all I heard is, oh, it's going to be like 89 Japan. And that's like the worst thing you could say to a stock market investor. So as soon as I hear that, whoa, what? And then hear him say, oh yeah, it's going to be like the early 70s. If it's not like the late 80s in Japan, it's going to be like the early 70s where the Nifty 50 get crushed, or it's going to be like 99 to 02 where everything else gets decimated. Yikes. That guy's modestly bearish. Yeah. All right, let's go over here. I put this timing up for everybody, so I got the calendar, and I translated it to California times. So 6 a.m. Jefferson we just had. I'm just gonna, I guess I should put a little emoji here about my opinion on what he said. Jefferson said nothing new. Committed to 2%, maybe higher for longer, etc. Okay, then we had Fed Williams speaks at, that would be a.m., 9:30 a.m. Barkin speaks at 10 a.m. You got a lot of Fed speak today. Jeez, Lord. You've got Powell at 10:15. And then you've got Collins at 1:30 p.m. So that's a lot. Notice how Kevin talks more about Bitcoin when it's ripping and at tops than when it's dipping. Really? You just, like, substantially don't pay attention then. Because, like, I talk about it all the time. Like, I mean, it's not the primary thing that we talk about here, but you know, at least 2 or 3 times in our lives we talk about it. After watching Kevin's Bitcoin video, or did you see the Israel videos this weekend? That's like all we were talking about was BTC. After watching Kevin's bank video last night, it makes me more bullish on BTC and meme coin. Yeah, you know, I have to say the Von Mises, it does kind of make you a little bullish on Bitcoin. I'll say that. That was pretty crazy. That was a reference, by the way, Von Mises. Let's see here. That was right here in the bank video. I encourage you to watch it. But they basically say, by printing money, governments can create an artificial boom, but this must inevitably be followed by a bust. A painful adjustment process takes place as malinvestments are liquidated. A stable monetary system would have to be based on a commodity standard, such as gold. Which, if he was alive, he might be a Bitcoin shill, honestly. Yeah. Gabriel, we're doing a lot more lectures this weekend on options. So by Sunday, we're going to have a bunch more options lectures in the Stocks and Psych course. Thanks for asking. Yep, Fed talk today. We just covered those times. Exactly. That was all the Fed talk. Let's see here. Brian, you could always email us at ir@househack.com. Bitcoin having 3 days. Let's live stream party. Are we going to do pizza or what are we going to do? Pizza and beer? Yeah, it's true. I don't talk that much about the others, like the alts. And we can always go look. We've got 2 minutes, though, until the bell opens up. So... okay. Yeah, Smith, you're really not paying attention, are you? Okay, that's okay. It's okay to be wrong. So, Bitcoin, 63.3, Ethereum sitting around that 3 level. I think we dipped to, did we dip right below 3 during the invasion? Or the, it wasn't really an invasion, it was more of an attempted attack. Yeah, look at that. We went down to 2880 there for a moment on Ethereum. Nice little rebound there. All right, so what do we got going into L market? We have Nvidia's up about 58 bips. The Qs are flat. Morgan Stanley's up. Volatility's actually down a little bit today. Dave & Buster's is up. Trump Media, Super Micro, Reddit. AMD is finally up again. Boy, they've had a down stretch. Look at that. They're trying to break their fib over here. Yikes. All right. Let's get ready for the bell. All right. So, bells in just a few moments here. Let's get our, we got to get our music.
NCAA champions, the University of South Carolina. We just talked to Coach Staley and Camila Cardoso, most outstanding player of the Final Four, doing the honors. At the NASDAQ, it is Bloomberg Media. As we check some opening levels here.
Red bagger. Who knows what that's from, by the way, that quote. Red bagger, stop right there. Something like that. Oh, man. Let's see if anybody knows where that one's from. But anyway, here's coin. You can see coin bobbing right between. We got two lines here. We got a 218 and a 223. And that's your coin movement. Trying to get a little bit of Q's action here. Trying to see that exactly which way we're gonna go. Then we've got Tesla. Oh, goodness gracious. The chart hasn't updated yet. I don't know why the chart's lagging. Oh, there we go. Down 3.4. Are we back? What the hell? I was about to go on my phone. I think I lost y'all there for a second. Rip. It's like, as soon as that Tesla chart started going bad, we got rug pulled. Okay, we're back. We're back. Everything's good again. Sorry. But anyway, I'm like, yeah, we could all hang out if you guys know that reference. That's pretty cool. So we got Apple at 44 bips to the upside. Tesla's trying to recover. It looks like you had a movement to that, a hard move to the downside there, right as the market opened, but a recovery now here on Tesla. So looks like, yep, you're getting a recovery in markets here. Nvidia is trying to move up. You've got the Qs trying to move up. I don't know how robust that's going to be. I always like to let the first few minutes go. So while we start getting a little bit of insight here, while that goes, a lot of you are close. It's actually Born Identity. And here, I'll play the clip because it's going to be cool. It's very short.
You, red bag, stop right there. Put your hands up.
The red bagger scene. I love it so much. The algos are going to be so pissed off at me. The red bagger scene. Oh, I love that series. Oh, man. Oh, gosh. Okay. So, where were we? Okay. So, NVIDIA, 80 bips. Still 6 bips on the Qs, trying to figure out direction. Morgan Stanley's actually given up a little bit of its run. What's happening here? You've got VIX. I don't think it's going to take a moment for it to update now. Tesla's right back at 3%. Enphase going back down. Apple can't hold on. You've got DJT can't hold on either. ARMS, it's starting to barcode right around 0. AMD is the only one trying to jump over this support level right here. This is a very important support level for AMD, mind you. It's a 164.46, and we're under it right now. So you're getting red again. ARM, AMD going red again. Amazon's pulling red here. Had a nice little run there for a moment, pulling red again. You've got Google. It's red by 5 bips, but it's technically trying to green candle. Salesforce, same. No real like violence to the upside. Embraer is kind of chilling out a little bit after its run. Still trying to figure that directionality out. Nvidia is now getting some red candles. Tesla's now down 3.6%. It's at, wow, 155. Ooh. Yeah, that's a pretty big move. Let's see here. Okay, let's see what else. What other news is coming through here? Yellen, we recognize the global recovery has been uneven and are working to mitigate the risks. More work to do on inflation, so we get a little Yellen commentary. Boring. 10-year. Oh, somebody's booger eater is commenting that the 10-year is up. Let me see. Yeah, 4.67. You're right. Tesla's now down about 4.3%. Oof. You've got the Qs, though. They're trying to go green. It's NVIDIA. But again, NVIDIA's at 860. I mean, this thing runs to 920 and back down, 920 and back down, 920 and back down. It's a good actual trade if you think about it. BTC just dropped below 63. You had Coinbase down 9% yesterday. I think you might get, you're probably going to get some more moves. If we keep moving down on Bitcoin, you're going to get some red on Coinbase here. Check JPM. Okay. Oh, yeah. There comes the red on coin. JPM. Yeah, we're starting to get into the fear territories again. You're right. Greed and fear in the 40s now. Is it all the way down at 40? Yeah. Why is oil going down? Well, so there's an irony here that tensions in the Middle East would lead oil to go up, but the risk of recession leads oil to go down. So you've got this really interesting tug and pull right now. And it is true, fear and greed does move very quickly. So that's why often it can be seen as a little bit of a leading indicator when things are starting to turn fearful. Q's now down 7 bips. NVIDIA, it's definitely getting more down pressure than it's getting up pressure. Tesla's trying to recover. It had that nasty negative like 4.25% green candlestick there, trying to climb back up, down about 3.9 right now. And then you've got Enphase over here at 141 to the downside. Apple down 24 bips. Goldman Sachs basically gave up its half-point gain in the morning. Amazon's pulling down more. You've got what's green this morning? I want to see what's green. Super Micro is up a couple percent, though it's starting to get its red. DraftKings is up a couple. AMD is holding on to 1%. NVIDIA is holding on to 1/3%. ASML 0.5%. So, some attempts of green here, but it don't feel good right now. Let's see what kind of news we got. Oh, there go the Qs. Yeah, a little fake breakout there to start. Tesla now down 4.5. It just dropped even more. Some people were speculating that UNH report. Thank you. That's United Health. Some people were reporting or speculating that insiders who get fired at Tesla are going to dump their shares. United Health shares. Oh, they're up They were up 6.6%. Tesla down 469 right now. UNH, United Health Group. Yep, still up 6%. And that is as their loss per share comes in at 153. Operating costs, I don't really know. I don't know where they beat. Maybe the numbers came in less bad than expected. Yeah, but anyway. Oh, better than feared report. Oh, okay. So there were low expectations for this sucker. Got it. Look how volatile NVIDIA is. I'm trying to go. Let's go to the on average for a moment. You can see that volatility a little better. Same thing with on the Qs, trying to come back. First 15 minutes are always the craziest. These are the unaveraged candlesticks on Tesla right now. Can it get us a green? No. Yikes. All right, let's listen in here for a moment.
A bit of a breather here. It had been actually looking down even more in the very early going. Nonetheless, it may be a while here until it's even clear. And obviously, if they were to bring a case and try to break the company up, that would be a years-long process.
Sure. Yeah, I mean, in terms of what the ask is, I mean, presumably they look at the exclusive contracts for all the different venues, and it's how they have that kind of vertical lock.
Yes,
on
and
the
they
business.
have to prove that that they've been precluding real competition as a result of their significant market share. But they did have a consent that went along with it, and have they been violating it in some way? And again, the company would say, listen, and even if you have complaints, you don't even call. It's a monitor that exists that you call and interact with somehow. So, I do think that while investors may be and have been waiting for this as a possibility, again, it's not clear exactly what they've done wrong and what is going to be done to change that behavior.
Maybe did Taylor Swift call the monitor line and
Maybe. Yeah,
register
maybe
her complaints? And
that obviously put them under the microscope,
Yeah.
including clearly the issues that they had in terms of the demand for
the stock came off the board.
Trying to get a green on Tesla right now. Looks like trying to break out of this, looking to be down about 4%. Trying to. Let's see if it can pull it off. Enphase down about 2. There is a support level for Tesla at about 152 is the level that I have for it. You can see that we're getting close to it, but we're not quite there yet. So that would probably put us down about 6% to actually get down to 152. But right now you are recovering pretty nicely from that hole back to about 3.7. Looks like you're getting some push in right here. The Qs are still struggling to find a direction. NVIDIA seems to be convinced the direction is up, but Bitcoin gave up its $200. It's been sitting there. Sunrun, another interest rate sensitive here, down 3%. Restoration Hardware down 2%. Apple's down 20 bips here. Palantir's down 169. ARM 35 bips. DJT again diving off a cliff on DJT. Wow. The post that Elon liked said, today Elon bet the entire company on robotaxi. Oh, Lord. Well, I think long term that could be very good. But in the short term, that is probably very, very scary for a lot of folks. Somebody here wrote, I told you that Elon has re-entered wartime CEO mode. This scene is familiar to the veterans of the Tesla community. Today, Elon decided to bet the entire company on robotaxi. I don't know if robotaxi is right or wrong. I don't have the answer. Elon enters wartime CEO mode. Elon liked that. Yeah. Yeah. Interesting. Okay. Well, we'll see about that. So, here's DJT. Apple's 172, kind of flattish. It really gave up on its 175. And you're still getting that recovery over here on Tesla. Qs are trying to go green now. And that's, but BTC just sold off another $300. And NVIDIA's up 1%. So it seems like the trend is AI up today. Like maybe an AMD day. Yeah, maybe. AMD's looking good today. Coinbase, yeah, well, Coinbase tanking on BTC tanking makes sense. And that's pretty normal. Apple's pretty flat. DJT down another 671, although it looks like you're trying to form a bounce now. Facebook's basically flat. Google's down 44 bips. Dell's down 1%. Disney is at 113. Reddit's at 39. Etsy's at 66. Affirm's back to $29. Boy, they ran up there for a while, up to like 60 or something, wasn't it? 60 or 50. And then they came out of nowhere and just, yeah, $52. That's what they ran up to. You're getting a pretty large candle there to the downside on Affirm right now. That trend is rough. Down 4% now. And it looks like Affirm and Tesla are going to be in a little bit of a race today. 3.8 to the downside on Tesla. So we'll see. All right, let's hop in here for a moment.
If any. But first, check bonds. As we showed you earlier, 10-year well above 4.6 this morning, and that may explain the lack of enthusiasm here. We are working our way through some Fed speak. Powell comes up at 1:15. Williams 12:30. Barkin at 1. S&P holding on to 50-50. Stay with us.
No, thank you. I won't. As soon as they say that, you have to change the channel. Oh, it would help if I actually changed to a channel that existed. Oops.
The world awaits Israel's response to Iran's attack over the weekend. That conversation ahead on Bloomberg.
Yeah, somebody's asking if the inversion has moved lately. Yeah, we're at about negative 30 basis points right now. So you're getting closer to that sort of uninversion level. Q is still red here. And even though AMD is trying to push up, which makes sense because it's under that 164 level, you're getting some bar coding basically over here, nearly, on NVIDIA. And the Q is just going right back down. I mean, we were just flat for a moment. Now we're down 16 bips again. Sunrun's getting burned. And where was the firm? Because they had some volatility going down, as well as Hood. Didn't they go to 20 bucks there for a minute? Yeah, look at that. Hood went to 20.55. Now they're at 17. That was after the gold card announcement. They got some major hype. Yeah. So Affirm and Tesla, ones to watch today for the downside. And then the upside, I'm watching AMD. Bitcoin just dropped again. 62.3 now. Again, I watch that to just watch what coin's going to do. And yeah, exactly. So, man, those Qs are stretching down now. What? Is there news? I don't think there is any news in the last few minutes. It's just, this is just the first 30 minutes of trading and it goes volatile. Remember, any buy-sell alerts that I send, I'm going to be sending those to everyone in the Stocks and Psych group. We have a coupon expiring this Friday. Now, the reason for this expiration is we are releasing a lot more lectures. So you're going to get the first 2024 lectures are coming out this weekend. So Saturday, Sunday, we'll be releasing the 2024 lectures for various different courses. I'll be working on those quite a lot in addition to what we already have. And so those are free upgrades for everyone already in. So some people have been in Stocks and Psych since like 2020. And just keep getting more content for free. So it's kind of cool. And of course, we'll have our Course Member Live coming up. But yeah, I'm watching this. Oh yeah, and email us for bundle coupons at staff@meetkevin.com. I'm watching Affirm and Tesla. It does look like Affirm is beating Tesla to the downside right now. And AMD's not really holding on. Yeah, look at that. You could almost call that a rejection at the 164.4 line by getting to about 164.2. So it's a little bit of a bearish trend today, I'd say. I think it's going to be a tough day to go long on calls on anything. I think you're probably better off on puts. The question is, where's your entry, and on what? So, you know, Tesla down 3.7. Affirm keeps trending down violently. AMD is trying to reject down. And watching BTC sort of lead the markets down is also interesting. Some days it follows, some days it leads. But there's really no news right now. I mean, we got industrial production like 30 minutes ago. That was boring. It was just at expectations. We've got really nothing until tomorrow. I mean, you do have JPOW speaking. That could be maybe what some people are curious about waiting for. That's possible. Let's see here. We have, okay, that's unexpected. Okay, there we go. So we have JPOW at, again, California times, 10:15, and you'll get Barkin right before him, as well as Williams. Williams actually, yeah, Williams at 9:30 California time, and then Collins thereafter. So we got a lot of Fed speak today. Could be because of that. Jamie Dimon is selling. I suggest you follow his lead. Man, you gotta watch the video we did yesterday on the banks and the front. sorry, that's an opinion. Yeah. Oh, look, she's on CNBC.
In the last few weeks, but obviously those geopolitical developments matter a lot. We factor them into our forecast, our modeling as much as we can, and we have to constantly monitor and see how it develops and what impact it has on all these fronts that I have mentioned.
On commodities, oil has been affected, and we watch oil, of course, with Iran. Brents are trading around 90. If it spikes higher, if there's an escalation, does that become a factor that changes your inflationary outlook for Europe and potentially your policy?
We will obviously, as you say, we are monitoring very closely. The most recent reaction in the last few days has been relatively moderate. It went up, it went down, but it's a moderate movement. We have gone through the period of significant hike of oil prices, and of course we will be informed by that episode. I think that, you know, since the particularly the latest development in Ukraine and the energy crisis that Europe suffered in particular on oil and gas, have changed the landscape as well in terms of sources of supply, in terms of dependence, independence, level of inventories, relationship with other countries. And I think that the situation will be different from what it was then. But
No, she said this time will be different.
The world, not just the euro area.
It's not just oil that's been rising. We've seen prices from aluminum to cocoa to copper, which is happening at a time where overall Eurozone inflation rates have been coming down. And I wonder how confident you feel about that level continuing to fall in the wake of some of these rises in commodities.
You know, I think on commodities we cannot be brought, you know, it cannot be a general assessment. We have to go sort of sector by sector by sector. Because when we look at food, for instance, whether it's processed or unprocessed, you have a first difference. And then cocoa has been has had a significant impact. But you also have to, you know, drill down, taking out cocoa, what is actually the inflation on food. Now, you can't live on cocoa. And all the other elements have to be really measured in that basket of food elements. But all commodity prices have an impact, and we have to be extremely attentive to those movements. Clearly, on energy and on food, it has a direct and rapid impact.
So the market is thinking that you're going to cut rates in June. You've signaled June. Is that still the plan?
You know, we are observing a disinflationary process.
That's a no.
Moving according to our expectations. And as I said in our latest press conference after the monetary policy decision that we made to keep rates on hold, we just need to build a bit more confidence in this disinflationary process. But if it moves according to our expectations, if we don't have, you know, a major shock in developments, we are heading towards a moment where we have to moderate the restrictive monetary policy that we have applied certainly since September, when we decided to hold rate and to keep that restrictive monetary policy. It will be time, as I said, subject to the no development of additional shock. It will be time to moderate the restrictive monetary policy.
So June, say it, Sarah.
In
say
reasonably short order.
Sounds like June. That's your next meeting. How do you think about the policy path from there?
I knew Sarah would do something like that. I love her. She's great.
I've been extremely clear on that, and I have said deliberately we are not pre-committing to any rate path. Why is that? Because number one, we are data dependent. Because there's huge uncertainty out there. I mean, we just spoke about geopolitical development. We have to be attentive to those developments. We have to look at the data. We have to draw conclusions from those data, and we will continue to apply the three key criterias that we have signaled now and which have served us well. You know, it's the inflation outlook, it's the underlying inflation, and it's the strength of monetary policy transmission. So we will, at each and every meeting, particularly when we have projections, but not necessarily only when we have projections, we will look at the evolution and whether or not those data, under these three criteria headline, if you will, confirm our perspective or not. That's what we will do. So,
market expects 3 this year. Is that reasonable?
You know, I wouldn't comment on that, because if you had asked me 2 or 3 months ago, they were expecting more than 3. And I think that we are better off from our, central bank perspective, of course, looking at what they anticipate, because they are big boys and they, too many boys, but they're big boys, and they run their models, they observe things, they take risk, they assess term premium. But we have to be data dependent. We have to look at our own work, and we are very, very steady and focused on what we are seeing, and we apply judgment at the end of the day. What is produced by these numbers and data and model projections have to be taken into account with judgment on the part of the governors.
All right, I'll try it one other way, which is how restrictive do you see rates right now being for the economy?
I think we have said that we believe that they are restrictive enough and that they are producing an impact. And we're saying by the same token that as data come in the next couple of months, because we will, in April, May will be key moments for data, our confidence will grow that this has been strong enough and we can begin to dial down and moderate the restriction imposed by monetary policy.
On the inflation front in particular, so 2.4% inflation, you've come a long way down. What does the path to 2% look like?
Bumpy. It will be, and I think it's important to actually understand that, because we have had this very regular, steady decline in the last few months. 2.8, 2.6, 2.4. I have no idea what the next one will be, but it might not be 2.2. It's not linear, and given the base effects that will be produced by very low prices of energy a year ago, we will have a bumpy road. So rates, inflation rates might go down, might go up a little bit, but they will fluctuate around this line that for the moment is going downwards. And as I said, unless we have major shocks that would disrupt that expectations, we should continue to be directionally down to our 2% target, which we believe we will reach sustainably in mid-25. So that's the expected path of inflation.
Why do you think that inflation has come down farther at this point in Eurozone versus in the US, where we're still in the threes?
I think we're talking about two different economies, two different series of shocks, and a different kind of inflation. But what is most different between Europe and the United States of America is the behavior of the consumer. And then we can go into why that is. But I think what we observe is European consumers that are very cautious, that continue to save significantly. When you look at the saving rates in Europe, it is still high and higher than pre-COVID. When you look at the American consumer consumes. And the level of savings overall is less than what it was pre-COVID. That's a major difference. Now, if you go to the root of why is that?
Fiscal?
It's fiscal, it's energy, and it's the natural tendency of the American consumers to have confidence, to spend, not to save so much. But fiscal has played a role. It was significantly higher in this country, and it was targeted to households, to consumers. So when people got a check in the mail, they really had money in their hands that they could spend, and as a result of that, consumed.
You said at the last meeting that you are not Fed dependent, you're data dependent, because the view on the Fed and what we're hearing from policymakers is it's going to be a little bit longer before they think about cutting interest rates. Do you not worry, though, about a gap, a divergence in policy between these two major central banks?
Well, let me explain what I meant by we are not Fed dependent, which I think is absolutely correct. There was a debate about the CPI numbers, which came out, I think, just very briefly before we had our monetary policy decision. And suddenly everybody fretted about that number. And the assumption was, oh, well, if the Fed is going to be delayed, which nobody knows, and I would certainly not pass a judgment on that, then of course it's going to impact the ECB. The ECB will be delayed. We are data dependent. So our data came down in March. We have had a little bit of data in April, But it's on that basis that we have to make our decisions. And not on the basis of any central bank in the world, be it the Fed, which is the largest and with the largest economy measured by GDP. We cannot make decisions on that basis. Hence, we are not Fed dependent. But what I will say is that the evolution of inflation, the evolution of monetary policy in any of the large economies that actually have a bearing on the global activity in the world, of course we take into account. And we take that into account in our own measurements and in our own models. So it does find its way in how we forecast. And as I said, one of the three key criterias are inflation outlook. And the other two, but inflation outlook. And that, of course, receives and is informed by multiple data, including what happens in other countries.
And also currencies. I wonder how closely you're following.
Central bankers don't talk about currencies as a matter of principle because we don't target currencies.
But it's a transmission mechanism.
Yes, and it does have an impact on inflation. So we have to be very attentive to exchange rates, to the value of currencies, to the value of the euro, and how much it impacts inflation in terms of imported inflation, for instance. Trade is affected also as well.
If euro goes back to parity, which we're not too far against the US dollar, is that a good thing or a bad thing for Europe?
As I said, I don't want to comment on exchange rate, any particular number.
Okay, but you're seeing what's happening with the Japanese yen, for instance, which has been plummeting because of the huge interest rate differential between Japan and the US. And I do wonder if that factors in and would be a concern if you do go ahead of the Fed in cutting rates.
We will be driven by our data. We will be driven by our analysis of the situation, and we will be targeting this sustainable 2% target that we have, which will determine price stability. This is our mandate. We are single-mindedly focused on that 3% target and price stability. We're looking at lots of other things, including imported inflation, including the volume of trade, including the productivity numbers, the multiple data that find their way into the work that we determine.
European Central Bank President Christine Lagarde.
Okay, so I wrote down from that April-May data will be very important. That seemed to be what she really highlighted, that April-May target, and that really they are not Fed dependent. I didn't get from that that June seemed likely. June felt like a toss-up based on that April-May data for the ECB. That was my take. June felt like a toss-up in the interview with Sarah Eisen. And as did, and then of course, like three rate cuts seemed really just sort of like not even possible. Seemed like it wasn't even possible to speculate on it. What was Sarah saying?
Inflation. So Europe's inflation or disinflation has come all the way down to 2.4%. That's why she feels confident in talking about the next move being a cut. And I thought the headline on that front is ECB will cut rates soon, barring any major surprises. She did not talk me away from the next meeting, which is June. She said, we're observing this disinflationary process that is moving according to our expectations. And if there's no additional shock, it will be time to moderate restrictive monetary policy in reasonably short order. If you see on that chart, the U.S. in blue is in the 3% range, Europe's in the 2% range, and the U.S. has flared a little bit this year, and that's the gap. And she pins it on the American consumer. And we talk a little bit later, and you'll hear in the next hour, Carl and David, on Money Movers about what she's expecting for the European economy, which hasn't really grown much in the last year. It hasn't fallen into recession. So we talked about whether rate cuts can help Europe avoid a recession. We also talk about, and you'll hear in the next hour, the balance sheet, which doesn't get a lot of attention. It's not the sexiest topic, but it's important right now as it relates to the liquidity backdrop.
Sarah talking about the sexiest topics in stock. I thought we only said that on the channel.
Should look like. I'm really excited to share that in the next hour of Money Movers. Also excited to share our entire interview tonight, 8 p.m. Eastern. It's a leader special. And David, I talked to her about everything, including her own leadership and how she became a central banker. You know, she's a lawyer. She was leading a major American law firm. She was a finance minister of France. She was the head of the IMF. And now she's in this 8-year term leading the European Central Bank till 2027.
Yeah, she has had a somewhat unique, but certainly incredible career, to your point. I didn't even know a number of those things, Sarah, so I look forward to the longer interview that isn't just going to be necessarily, will be focused on, but not necessarily all about ECB policy. What else you got for us this morning, Sarah? I know you're in D.C., but I know you're still prepared beyond Lagarde here in terms of things we should be watching, certainly from a macro perspective this morning. As Carl said, we continue to keep a close eye on that 10-year in particular.
Yeah, watching the 10-year, watching the Fed speak, because we don't have any major economic data releases for the rest of the week. Got some housing numbers today, but as far as it's shifting the view on policy and rates, that's really the topic du jour among the investor community. We did get some comments from Mary Daly, who is a voting member. She's at the San Francisco Fed. The worst thing she says to do is act urgently when urgency is not required. So very different tune here than Christine Lagarde. We have to be thoughtful about not getting too confident that the latest sticky inflation is an indication where we are going forward, and we can't get too confident, she says, on the other side, basically, that it's necessarily definitive in terms of what they should do. The lack of urgency that that projection that inflation will continue to come down is going to materialize. That we don't have to be urgent. It's a continuation. And now they're all kind of singing from the same hymn book of the backtracking of, OK, we're moving into a rate cut. They're not saying that they're not going to be cutting rates. They're just saying that they don't have to be urgent about it, and they don't have to be immediate about it. I think there was less of that than, say, what we're hearing from Europe and the ECB. And just because, you know, Europe is on the mind with these Christine Lagarde headlines, if you look at the gap between U.S. and Europe GDP, that really does tell the story of the U.S. consumer consuming and the European consumer saving. And it's also just interesting. We talk a little bit, and you'll hear about it in the leaders interview, David and Carl, about where the growth can come from in Europe. You know, why doesn't Europe have a Silicon Valley? Why don't they have a single market yet? Would that make the economy more dynamic? Would it encourage more investment and more capital? Those types of sort of bigger picture issues that maybe should be part of the more immediate conversation about growth right now. We also talked about China with some of the numbers out of there today and how that's feeding into the export economies, for instance, of places like Germany.
Well, we did get a GDP and an industrial production number out of China. Obviously, the continued focus there is on what is an economy certainly led by exports, by industrials, as opposed to anything having to do with domestic consumption at this point, despite the hopes that were dashed that the Chinese consumer really would step up in a bigger way after the lockdowns ended some time back.
And that's a savings rate story, too. High savings rate. Remember Larry Fink of BlackRock talking about that? And the Chinese are saving. They're not consuming. And now there is this chorus of policymakers and CEOs, starting with Treasury Secretary Yellen in Beijing last week, but even ECB President Christine Lagarde as well, saying, you know, that the source of the growth should come from consumption, and they should pivot that economy, and ultimately that would be better for global economic growth. But look, it's a fascinating time with geopolitics front and center, how that's going to impact global GDP going forward, this increasing fragmentation. A lot of discussion about that, too. Carl and David, about moving supply chains closer for security reasons, trade barriers and tariffs, which is obviously front and center also, David, because of what former President Trump has been saying he will do if he becomes president again, which is increase those kind of protections and restrictions.
Right. Something else front and center this morning, Sarah, the financials in particular. We got results from the likes of Bank of America and Morgan Stanley. They're moving in two different directions. You can see it right there. All
right. We're going to pull off that for a moment. So, okay, interesting little gathering there on the ECB and some European monetary policy. One thing that I've been noticing is during this talk, BTC has come back by about $700. So that's driving coin back up. The Qs are now rotating up after the first Now 30 minutes of trade. You've got Tesla trying to move up. It's breaking out of that 4% trap. And you're finding AMD's getting, like, having a real challenge breaking above its sort of 164 level. So I'm watching these pretty closely. NVIDIA seems to be the one that just wants to tear today. And I don't know that we're really getting any other. So that, well, Supermicro. Yeah, Supermicro is moving with it. Oops. There we go. Supermicro's moving with it. And then we've got Astera Labs, which is a pretty volatilely moving one since it just IPO'd. You get a lot of rapid ups and downs on this one. Just be careful, though, yesterday. Look at Astera Labs, for example. You had these minute candles over here that brought you up 3-4%. Sorry, hour candles that brought you up 3 or 4%. And you kind of tanked into the end of the day. But that's really because we got that Israel announcement. That Israel announcement, I think, really just sort of poopsie-doopsied everything yesterday. And so that made trading a little bit more challenging yesterday because you had to trade around, news that could have been as simple as, yep, we're done. We're just going to declare victory, or a potential escalation. So yesterday was a little bit more challenging. But we'll see how today goes, especially since now we are expecting a strike from Israel. The question just is when. So we'll watch that very closely. Otherwise, Enphase looks like it's stabilizing around 2%. Tesla in those upper threes to the downside. Same with Affirm. AMD getting stuck, trading mostly sideways. And we'll see if that Bitcoin rally there will last over the last 30 minutes. Otherwise, Apple flat. Intel down another 85 bips. Restoration Hardware's down 2.6. ARM Holdings is trying to stay up about 0.5%. And Supermicro is really the runner today. Anyway, Costco's up. I think they're overpriced. Oh, Starbucks back down under 85. I'm really waiting for Starbucks to get under 80. Although, watch, it'll get under 80, and then I won't want to buy it then either. I don't know. I've been having a hard relationship with Starbucks. I've been wanting to buy them for a while, but they keep going down. So I'm like, I keep getting confirmation of why I don't buy it. That's the downside of when stocks are falling. Anyway, okay, so let me see. I'll quickly look if there's some other news, and then I'm going to go ahead and push the button. Ooh, Tesla is trying to recover, getting into the low threes right now. And so let's push the button, see which way we go, and then I'll look for a little bit more news. Keep in mind, this Friday we have that expiration of the next coupon with a lot of 2024 lectures coming out in pretty much all of the courses, so that'll be really exciting because a lot of updates to give. All right, let's push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah, no, just bad news here. Infotech was the worst performing on the S&P 500 Monday. Russell 2000 as well. Tech now notched 2 straight days with more than 90% down in the sub-index. Wow. Crazy. So we'll see which way it goes. I'm going to head over to the course member live stream. We'll see you all soon. Folks, remember, once you join the courses, you get lifetime access to those course member live streams as well. Thank you so much, and see you all very soon. Appreciate it.